Hey there, traders. This is Sam. Welcome back to another E-mini Futures Market Recap for Friday, December 13, 2024. The time is currently almost 7 a.m. I need to get this pre-market recording with the levels finished early because I have a couple morning meetings to get ready for and several other things that need to get done today. So no time to get in front of the screens today and make any trades most likely. But here's what I'm thinking at this point. You'll notice that the chart looks different than usual. That's because I only have 3 levels on the board that I feel good about. Those are the dark blue horizontal lines per usual. If price hits these levels, there is a good chance there will be reactions in the other direction, enough for at least a base hit. The other levels in the lighter blue lines are trend lines where price has been constrained for the past week or so. I'm not really looking at these trend lines as levels to trade against. They're more there for reference. If the bulls can keep price elevated, they need to get above the top 2 levels, with the highest being 607.16. Then they can test the top of that upper trend line. And if they break through, then the bulls are in charge, and that probably means they're going for new highs. Don't forget, all they've managed to do so far is put in a lower high a couple days ago. They're making it harder for themselves to get above these areas of overhead resistance. If they can't stay above those upper levels and they get below instead, I don't have any levels below that until 602.08. There's just nothing in that space that I feel good about to include today. So the lower trend line is more of a reference for me. Not something I would trade necessarily. It would depend on how other things look at the time, if price gets down there today. If price gets below that trend line today, the odds are increased the bears can push price down even lower, so being on the short side is probably where I'd want to be in that case. But those are just my thoughts for what might happen today. When I finish here, I won't be looking at the market until much later tonight, or maybe even tomorrow morning. Just too much going on over the next 24 hours. Whatever happens, we'll come back to this chart either later tonight or Saturday morning sometime and talk about it. Catch you on the other side. We're back. It's now Sunday evening, and we're looking at Friday's price action in the SPY. The way they ended for the week is important, and price is at a place where big things can happen in the near future. Some of this becomes apparent when you look at the March 2025 ES contract, which started picking up volume toward the end of last week. We'll look at a chart of the continuous contract of the E-minis later, and I'll show you where an important level is on that chart for the near term. There's a lot happening next week that has the potential to get things moving. Overall, there seems to be weakness across a lot of markets right now. But let's talk about how you would have traded these levels on Friday. So price got up to these levels early on. I didn't call this a zone, these 2 levels here. I didn't mention that in the pre-market video on Friday, and I did not say that in the email that I sent out. It really should have been treated as a zone, though. The levels were well within $1 of each other. So usually when they're that close together, it's good to look at this whole area like that as a general zone of support or resistance. For Friday, this area was definitely overhead resistance, and price fell down from that area once resistance was established. But we're treating this as a process. So following the rules, you would have gone short at 607.11. That was after the 9:45 a.m. candle closed. Top level with a 5-cent buffer factored in. You can see in this case, bringing the trigger point down 5 cents allowed this short trade to get pulled in. The high was 607.13, so a very nice entry. And if you had waited for price to get up to the precise level at 607.16, you would have missed getting into the trade. So they pulled back and gave a base hit of 4 ES points pretty quickly, and they're coming into 606.58, which would be 606.63. We're moving the level toward price with that buffer. So now the way to look at this whole area really was general resistance, AKA a zone. So once you were short in this area, you really wouldn't have wanted to immediately go long as price got down to the bottom of that area. But as I said, I put these numbers out kind of fast on Friday morning. I did not identify this area as a zone, did not state it in the pre-market video or the email. So just to keep things consistent, I'm going to treat this level at 606.63 as a regular level where you would have gone long with E-mini contracts. Although if I had been trading on Friday, I would not have wanted to be long that quickly after going short up at 607.11. But anyway, in fact, I probably would have scaled out of this entire position by trailing part of a multi-contract position. You've seen plenty of the live trade recordings where I've done just that. But anyway, going long at 606.63 would have put your trade out of the money. And the signal to reverse happened at 10.5 points in the red. And the reversal gave back a quick base hit as they kept falling. So when price got down into the area of this trend line, it wasn't necessarily there to trade against, as I said on Friday morning. There was a clue that this area was important by the way they kind of stalled out right here above the area for about, 14, maybe 15 minutes or so. This was really a reference level, this trend line, to see if price would stay above it, which would have meant the bulls would have probably tried to retest this zone, try to get above it, try to go higher. But this little consolidation here before the trend line, after falling quickly down into this area, was a sign starting to develop that they probably had a lower destination. There was an unfilled gap below the trend line right here. That was Thursday's close. But once price got below this trend line, they fell fast at 10, 12 points or so and blew right through that gap from Thursday's close. So that's bearish behavior. The trend line served its purpose, confirmed that at least for the near term, price wasn't likely to rebound and go higher for the rest of the day. And there was plenty of room for them to fall before hitting 60208. They found support right here, by the way, and that was a gap from December 10. They just hit that close from December 10, bounced from that area. That could be a good sign because this support down here at 60208, that's really the line in the sand on Friday, and it probably will be next week too. If they got down there quickly on Friday, that probably would have been a good bounce area. But the way that things look now, that area is starting to look more and more important, and we'll talk about that more later. So all in all, 2 official trades, a few points given back to the market. I hope that any traders out there who had these levels from Friday morning saw the writing on the wall and treated this area up here as a zone and traded it accordingly and just being short once they got below that zone. That was definitely the position to be in on Friday morning. There is no recording of live trades on Friday because I was not at the screens all day and not trading. On the daily chart, we're seeing kind of a sideways thing kind of happen right now. We've talked about this a couple times before. There needs to be a decision soon before price is going to go either direction. There's an important area on the futures chart that we talked about that they need to keep price above. We'll look at that in a minute. If they want this sideways consolidation to go longer, which could be enough for a reset to try for higher prices again, but if they get below that area and close below, it could mean a big drop is coming, especially considering that we've got a lot of data releases, the FOMC announcement, and everything else happening next week. A lot of things that can move the market. Before we look at that E-mini chart and talk about that level there, notice how when we go down in time frames, this is a 4-hour chart, there are signs of weakness starting to show up. Like on this 2-hour chart, for example, at the close of Friday, they got under the 50-period moving average. That's the blue line here. If we see this kind of thing happen across more time frames, it starts to validate more of a bearish tinge to the market. Like if all the time frames are below the 50 period, we're likely in a bear market, big picture. But on the monthly and the weekly and the daily, we're all extended well above these averages. So these little signs of weakness will start on smaller time frames like we're seeing here on this 2-hour chart. And even if they manage to drive price up higher early next week, they're likely to hit overhead resistance around like 606.50 or so, maybe a little higher. If the timing is right and price is up there next week, especially if it coincides with one of the many data releases scheduled for next week, that could be a good recipe for price to fall from this area and go lower. They might not even get that high before they fall. So that's an area to keep an eye on, though. On the hourly chart, they're below the 50-period moving average and riding this 100 period. That's purple. It should be purple. At least it is on my screen. So if price gets under this area, there is room for them to fall farther. So here is the March contract of the E-minis, the H month code. So volume started picking up a lot last week, toward the end of last week. So that's what's going to be traded going forward. The price is in a different position on this March contract than it is in the front month or the December contract, the outgoing contract. So we'll start trading this one next week, starting Monday. So I have this level at 61.11. This is an area that price needs to stay above, in the futures at least, for the bulls to stay in charge. And even if price does stay above 61.11, there are areas of overhead resistance above current price that the bears will probably defend. Keep in mind what the smaller time frames are doing. If more and more profit taking occurs around current price, then we'll probably see a bigger than usual drop. The E-minis need to get below 61.11 first, though. And this is a different price than where the current price is on the December contract right now, for what that's worth. Here's a quick look at what's going to happen this week. So 9:45, Monday morning, PMI data release. Tuesday, 8:30 before the market opens, there's some sales numbers coming out. Wednesday, this is the culmination of the FOMC meetings. So Wednesday afternoon, a lot of things happening around 2 o'clock Eastern. And then a GDP on Thursday morning. Friday, there's CPI before the market opens. A lot of things are happening. Where price is right now, it's not going to be surprising if there's a big move starting next week. Here are the logs to show how the trades landed, how many points were given back in this case. In the case of playing by the rules and not really treating that area as a zone and getting out of that short position, you would have given back a few points, gained a few points, and ended in the red a little bit. You could read the notes if you want. And then I took no trades myself. So really the whole week was in the red. So playing by the rules, treat each level the same. If you're trading 2 contracts for this entire week, a negative $1,000 or so, slightly above that for the week, Monday through Friday, playing by the rules. That happens sometimes. That is the 21% there. Is how that's tracked. Current lose rate, if you will. If the win rate is 78.65% currently over the last 3 years or so, then the loss rate is the delta of that is 21.35%. So that's what I've got for today. Thanks for watching. Tomorrow morning is Monday. There will be more levels to trade against, and we'll be trading the March contract of the E-minis and paying attention to other markets. Volatility is probably coming to a chart near you. I'll talk to you in the next recap video. Have a great rest of your day.